Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at America's gold and silver.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us figure out what you want to hear more of. But okay, looking at the data for this company today, frankly, it reads less like a standard mining report and, well, more like a geopolitical thriller.
It really is a fascinating case study.
We're digging into America's gold and silver, and if you think this is just another story about, pulling shiny rocks out of the ground, you need to stick around.
Yeah, the data paints a much bigger picture here. We're looking at a company that is ticking a lot of boxes right now.
Right?
You've got a massive operational turnaround, you've got a strategic pivot into critical defense minerals, and you have a stock chart that is, quite frankly, defying gravity.
Okay, so before we get into the weeds, let's start with the headline number, the one just jumping out of all the reports. It is strictly about production.
It's a monster number.
It is. 2.65 million ounces of silver produced in 2025. That is a 52% increase year over year.
52%.
Now, I follow the mining sector enough to know that usually established miners are happy if they squeeze out, 2 or 3% growth? Maybe 5 if they have a great year.
Yeah.
52% feels unusual.
It's incredibly rare for an established miner. I mean, you usually see that kind of jump only when a brand new mine comes online and goes from 0 to 100.
But this wasn't that.
No, this is a story of operational execution at existing assets. The data highlights the Cosalá Operations as the real MVP here. That single asset produced 1.19 million ounces on its own.
So the machinery is actually working. They aren't just promising metal, they are stacking it.
It's humming.
Yeah.
And the pacing is what's so interesting. This wasn't a slow, steady climb throughout the year. No, if you look at the quarterly breakdown, the second quarter of 2025 saw a 54% surge just in that 3-month period.
Wow.
So the ramp-up hit hard and fast. They essentially just flipped a switch.
Which explains the market reaction, which we will get to in a minute. But I want to pause and play the cynic for a second.
Okay.
Because when I look at the income statement here, I see the production records, and I see revenue just topping $100 million for 2024. But I also see red ink, a lot of it.
You're looking at the net losses.
I am. Trailing 12 months, they're down almost $60 million. So help me reconcile this for everyone listening.
Sure.
How do we have record-breaking success on one hand and, bleeding $60 million on the other? Why should anyone buy a company that is losing that much money?
That is the classic mining paradox, and it's the most important thing to understand about this specific moment in the company's life cycle.
Okay.
Mining is capital intensive. Before you get the metal out, you are burning cash to upgrade equipment, dig new shafts, and process ore. What the numbers suggest is that a lot of that $60 million burn was the cost of building the engine that is now running.
So it's the price of admission, like building the factory before you can sell the first car.
Exactly. The narrative here is that the expensive part, the ramp up at the Santa Fe and EC120 mines, is largely in the rearview mirror now.
And now they get the payoff.
Now that production is scaling, you get what's called margin expansion. Basically, the fixed costs stay the same. You still have the same lights on in the tunnel, but now you're spreading those costs over way more ounces of silver.
So each ounce becomes cheaper to produce.
That's the theory. But I won't lie, there was a genuine risk last year that they might run out of runway before the plane took off.
Really?
Yeah, if you looked at their balance sheet in the third quarter of 2025, they only had about $40 million in cash.
Which, for a mining company losing money, is uncomfortable.
Yeah.
That's check under the sofa cushions territory.
It was tight.
Huh?
But then, right at the end of the year, the picture changed completely. They finished 2025 sitting on $130 million.
Okay, so they didn't just sell a few more silver coins to get there. Where did $100 million come from?
This is where we need to talk about the private placement. They executed a raise of $132.25 million.
Let's break that down. Because usually when a listener hears share issuance or raising money, they think dilution. They think, my piece of the pie just got smaller.
And usually the stock price tanks on that news.
Right. But that didn't happen here.
No, the market actually liked it. And to understand why, you have to look at the intent of the cash. There are 2 reasons a company raises money like this. One is defensive.
The we're broke, please save us reason.
Exactly. That's when the stock crashes. It's a distress signal.
But this was different.
Right, this was offensive. The data is clear that this $130 million war chest is specifically for growth funding, the acquisition of the remaining stake in the Crescent mine, and restarting that operation.
So the market sees this as buying fuel for the rocket, not paying off the credit card.
Precisely. It positions them for 2026 without the constant fear that they'll have to go back to the market in 6 months. It clears the runway.
Which brings us to the part of the research that I found most surprising. We keep calling them America's gold and silver. But reading through the asset list, I feel like they might need a name change. Because there is a third mineral here that seems to be driving the geopolitical interests.
You're talking about the moat, the antimony.
Antimony. Now, I'm guessing 90% of people listening have never thought about antimony in their lives. I certainly hadn't. Why does the research flag this as such a big deal?
It's a fair question. Antimony is a brittle, silvery metalloid. You don't make jewelry out of it.
Okay.
But it is absolutely critical for the defense industry. It's used in armor-piercing ammunition, infrared sensors, precision optics. It's also a key component in flame retardants for military gear.
So high tech and high stakes.
Very high stakes. And here's the kicker. The United States has almost no domestic supply. The vast majority of the world's antimony comes from China and Russia.
I see where this is going. If supply chains get tight or geopolitical tensions rise, that supply is vulnerable.
It's a supply chain nightmare for the Pentagon. So when you have America's gold and silver sitting there as the largest active U.S. producer of antimony,
They aren't just a miner anymore.
No.
They are a strategic asset.
that's how the market is starting to view them, the geopolitical hedge. And they aren't just sitting on the ore hoping someone buys it. The notes mention they secured offtake agreements in 2025,
For how much?
561,000 pounds of antimony.
Can you explain offtake agreement for those who don't speak mining?
Yeah, think of it as a pre-order. A buyer, usually an industrial partner or a refiner, has signed a contract saying, we promise to buy X amount of this stuff at market rates as soon as you dig it up.
So it's a guaranteed buyer. It de-risks the revenue.
Exactly. They also have similar agreements for nearly 800,000 pounds of copper. So you have silver paying the bills, but you have this strategic layer of antimony and copper that makes the company much more valuable to the U.S. supply chain.
And we haven't even talked about the quality of the dirt they're digging up. I saw a number in the drill results for the 034 vein complex that looked like a typo.
The 5,443.
Yeah. 5,443 grams per ton of silver. I'm used to seeing, what, 200, 500 maybe?
A decent mine might run 200 to 500, sure. A high-grade mine might hit 800. 5,443 is what geologists call bonanza grade.
Bonanza grade. I like that term.
It effectively means you are digging up rock that is incredibly rich in metal. And why that matters for the business, aside from just being exciting, is that it supports the economics we just talked about.
Right.
If your rock is that rich, you have to process less of it to get the same amount of silver. It drives your cost per ounce way, way down.
So let's recap the fundamental picture before we look at the stock chart. Production is up 50% plus. They have a mountain of cash for expansion. They are the U.S. answer to the antimony shortage. And they are finding bonanza-grade ore.
That is the fundamental thesis, yes.
Okay. So obviously, if I figured this out, the market figured this out too. Let's talk about the price action. Because on fire feels like an understatement.
It's been a rocket ship. We are looking at a share price of $10.10.
And context is key here. Where did we come from?
Well, the 52-week low and previous resistance levels were around $6.34. We've completely blown past that. The stock is up 452% over the past year.
452%.
And it's not slowing down. Just recently, following that production news release, it surged 16.3% in a single day.
When I see a move like that up 400% in a year, my instinct is usually I missed it. It feels chased.
Sure.
But looking at the technical analysis, does this look like a bubble about to pop or does it look like a breakout?
The technicals suggest a verified breakout. And the one metric you really want to look at here is volume.
Why volume? Why does it matter how many shares are trading?
Think of volume as the fuel. If the price goes up but nobody is trading, it's like a car rolling uphill. It's going to roll back down.
Right.
But here, we are seeing spikes of 5 million plus shares changing hands on the way up.
That's not retail investors on their phones buying 10 shares.
No, that is big money. That indicates institutional flow. Funds are stepping in. It tells you that despite the volatility, and miners are always volatile, the dips are being bought aggressively. The buying pressure is simply overwhelming the profit-taking.
It feels like the market has suddenly woken up to the story.
It has. For a long time, this was a show-me stock. Investors were skeptical. They wanted to see if the company could actually fix the operational issues at Cosalá. Now that the numbers are hitting the tape, the market is rushing to reprice the asset.
Let's talk about that repricing, because there is a weird disconnect in the notes regarding the Wall Street analysts.
That is a bit funny.
The sentiment data from Alpha Vantage is super bullish score of 0.55, 9 out of 10 news stories are positive.
Right.
But then you look at the analyst price targets. The experts at the banks have targets ranging from 333 to 591.
And the stock is trading at $10.10.
So the stock is double the highest expert forecast. How does that happen? Are the analysts just asleep at the wheel?
It's a classic case of the market moving faster than the spreadsheet models. Analysts publish reports maybe once a quarter. The market updates every millisecond. When you have a massive structural change, like a 52% production hike and a $130 million cash injection happening back-to-back, the old models just break.
So the analysts are looking in the rearview mirror.
They are playing catch-up. The investors are looking at the production and saying, we don't care what your target was 6 months ago. This is a fundamentally different company today.
It really highlights the value of doing your own research rather than just reading the summary line at the bottom of a bank report.
Absolutely. If you had just listened to the price target, you would have sold at $6 and missed the run to 10. The market is always the ultimate arbiter of price.
Okay, so we've had the run. The big question is, what's next? If I'm looking at this today, what are the dates I need to circle on my calendar for the next 3 months?
The next major financial checkpoint is the earnings report, expected around May 2026.
May. That seems like a ways off. Why is that one so critical?
2 reasons. First, the market needs to know if 2025 was a fluke. Can they sustain that production rate into the first quarter of 2026?
So proof of consistency.
Right. If they post a weak quarter, the narrative takes a hit. But second, and more importantly, that is when the antimony money starts to show up.
Right, because the offtake agreements kicked in January 2026.
Exactly. So that first quarter report in May will be the first time we see the actual financial impact of the strategic minerals hitting a bank account. It's the proof of concept.
So that's the catalyst now. I have to be the buzzkill. It's part of the job description.
Go for it.
We've laid out the bull case, which is very strong, but we need to look at the bear case. Why should a listener be terrified of owning this stock?
You should always be a little terrified of miners. It's a tough business. The first red flag here is simply valuation.
Because it's run up so much.
Right. The price-to-sales ratio, which is just the stock price divided by how much revenue they bring in per share, is sitting at 20.3x.
Oof. 20 times is what you expect from a high-growth tech company, not a miner.
It is very high for a miner. It means the stock is priced for perfection. The market is paying today for growth that hasn't happened yet.
So there is no margin for error. If a machine breaks or a vein pinches out or silver drops,
the stock could get crushed. That multiple compression would be brutal. If the growth story slows down even a little bit, the stock price will correct violently to match the revenue.
And what about the financials? We celebrated the cash, but they are still losing money.
That's the second risk. If the growth falters, they're still burning cash on operations and servicing debt. And while $130 million is a lot, mining eats cash for breakfast.
So that cash pile could disappear.
And then the dilution comes back.
And finally, just the commodity risk itself.
Always. They are tethered to the spot price. If silver drops $5 next week, this stock goes down. Doesn't matter how strategic the antimony is, if the underlying metal crashes, the stock crashes.
So it's not a savings bond. It's a high-octane growth play with real risks.
Exactly.
But let's pull it all together for the final verdict. Based on everything in the analysis, the production, the antimony, the valuation, where do we land?
I'm looking at the aggregated data, and I have to agree with the bullish sentiment. It scores an 8 out of 10.
8 out of 10 is a strong conviction. Give me the elevator pitch.
Here's the pitch. You have a massive growth story, 2.65 million ounces, up 52%. That is rare.
Yeah.
It is backed by high-grade discoveries. That 5,443 gram per ton number is sticky.
It's hard to ignore.
And then you add the strategic layer. This isn't just a silver miner. It's a premier U.S. critical minerals play. In a world where supply chains are fracturing, a U.S. domicile for antimony is worth a massive premium.
And the time frame? Are we
Yeah.
flipping this next week?
I don't think so. This looks like a multi-year hold. The thesis relies on them leveraging rising silver prices and successfully integrating the Crescent mine. You want to be around for the antimony revenue to fully mature.
And for the red ink to turn into black ink?
Exactly. For those operational efficiencies to actually show up on the bottom line.
So we're looking at a 2026, maybe 2027 horizon to really see the full value unlock.
I think so. It's going to be a volatile ride, but the destination looks very promising.
There you have it. A record-breaking production year, a strategic pivot to defense-critical minerals, and a stock chart that is telling us something big is happening. America's gold and silver is definitely one to keep on the watch list.
Definitely.
That wraps up our talk for today. Thanks for hanging out with us as we unpacked the numbers.
Catch you next time.
And hey, before you close the app, if you're holding America's gold and silver, or if you think the antimony story is overblown, drop a comment. We want to hear your price targets. Don't forget to subscribe so you never miss a catalyst. See you tomorrow.